Hi, good day to all. This is Kelvin here again. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices. So I'll be touching on the latest trend bias and key levels to watch for this week on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and as well as the German 40 indices for the week of 21st of Feb to 25th of February 2022. So before we start, let's take a look at the disclaimer slides first. Okay, great. So, as you all know that this current situation right now in the global market space has been more or less been primarily driven by two factors that is driving short-term volatility in the global stock market and as well as other asset classes like oil, gold, and even in FX. So, two primary factors are number one, the heightened uh, geopolitical risk driven by or triggered by the current Russia-Ukraine tension, which has been fluid at this point in time and very dynamic. Okay, so I actually shared with you all what happened actually over the last weekend and what are the key factors that we need to watch out for. So these are actually being we call it telecast or tweeted in my social media account, which is my official social media account. So later I'll share with you all how to sign up or to find me on social media, where actually I share with you all the latest market snippets that is driving potentially driving the price action of the financial markets. So before we jump into the technical picture or the technical analysis chart of the various indices as well as the key levels that I like to cover, is let's take a look at the performance and a bit of momentum analysis across the group for the global stock market indices. So you look at US itself over here is that all on the red, okay, from the SPX 500 negative 1.6%, Nasdaq 100 negative 7.1%, Dow Jones negative 1.9%, and the Russell at negative 1.0%, 0.3%. But however, if you look at across the group, right, they are actually the outperformer last week. Okay, in terms, yes, all of them are actually down, but actually they're down at a slightly lesser magnitude. And what's interesting over here is if you compare to last week performance, okay, the two majors, the SPX 500 and the Nasdaq 100, actually fare slightly better compared to last week, especially the tech heavy or the higher beta Nasdaq 100 level, which is only down negative 1.7% versus last week of negative 3%. So despite okay, sorry, okay, yeah, so despite that, later part of last week was actually driven by this geopolitical risk factor that pushed down the market lower, but they're actually holding on to key supports level. So we can't actually validate a further potential now move for beyond this level. So later I'll share with you all why we can't do that because that is a level that's being defined on the weekly chart on the Nasdaq 100 as well as the SPX 500. And what interesting over here is that if we will start to see take into account of the differential between last week performance and as well as the prior 4 week average, things have started to turn around slightly for the SPX 500 and the Nasdaq 100. So especially the Nasdaq 100, where prior 3 to 4 weeks they are actually the worst performer, but momentum has started to improve on the Nasdaq 100, which is actually has a slight positive momentum analysis figure or the momentum. This is the difference. So I'm taking the last week performance minus of the prior 4 week average. So give me a positive rate of change of 0.48%. So is think of it as like a smooth momentum factor. So this smooth momentum factor has started to turn positive for the Nasdaq 100, which was actually 3 to 4 weeks ago was the worst performer. So things seems to be a bit of turnaround on the Nasdaq 100, which is positive as a whole for the US stock market. And also we will start to see a bit of also the worst previous worst hit was the Russell 2000, also now showing a positive gain of 0.46% if we take into account the difference of last week performance minus the prior 4 week average, which is the we call it the smooth momentum factor. So one thing that is underperforming will be the Hang Seng Index, the Hang Seng Tech, and the reason why they actually underperform, especially the Hang Seng Tech, was on actually last Friday. So last Friday, the China government actually made an announcement to actually ask uh, food platform technology company like Meituan to actually lower down their delivery costs for restaurants. So hoping that to actually ease the business cost of a restaurant in China. So that actually shocked the market participant, for instance, because if we were to look at since the start of this year, most of the investment banks, major US investment banks, has started to turn bullish on China big tech due to its very cheap relative valuation factor versus the rest of the world, and as well as this impending, or I would say more targeted easing policy that will come out from China due to the various we call it guidance that was actually given since the start of last quarter in start of last quarter last year. So that clampdown came as a shock to the market, a minor shock to the market, saying that hey, who knows, China may start to do a much more stringent, we call it, or further we call it crackdown on China big tech that could actually cause a negative impact on their bottom line. So that's actually explained the underperformance of the Hang Seng Index and the Hang Seng Tech Index last week. Then definitely we start to see Europe. Europe was the worst performer, which is down negative 4.8% last week. So that was actually due to its number one, its close proximity with Ukraine. Yeah, so if Russia were to actually invade Ukraine, Europe would be the one. Logically speaking, in terms of sentiment, Europe will be the one that face the first hit or the first negative impact. So that actually explains last week DAX underperformance of negative 2.5%. So now, let's quickly take a look at the sectors. So if you look at across the sectors, right? So this was last week performance. All 11. Okay, in fact, only one sector is in the green, which is a consumer defect. This is consumer staples. So that's considered as a defensive sector. Positive 1.11%. All right. So definitely you will start to see energy as starts to take a bit of profit taking. So energy was actually a star performer in about a month or so, and even in the last quarter of last year. So fourth quarter of last year, I would say. So last week was actually the worst performer, negative 3.71%, and also that actually came in line with our expectation of this potential ongoing, still potentially ongoing minor pullback of WTI crude oil prices. All right. So those who want to understand more about WTI crude prices, I also tweeted the technical analysis configuration on my social media account, which is my Twitter. So later I'll share with you how to access my Twitter account to get other updates or interesting, we call it market commentary on other asset classes like WTI crude oil, which I also cover on a very frequent basis, on a daily basis, I would say. So now, very quickly, I want to share with you all another call it technical analysis chart where I plotted the SPX versus the VIX as a contrarian opinion indicator. So what doing by contrarian opinion indicator is if the VIX prices starts to goes up relatively too high, so that relatively too high got to be determined by technical we call it resistance level, whether has it hit the key resistance level, and this is where we could start to see a potential bullish reversal on the SPX 500. That means SPX 500 has fallen to a level which is in correspondence to saying that hey, the VIX has reached a relatively high fearful level where we could actually do a wash off or wash out of the bears, and it gives right to a potential bullish reversal at least in the medium term. So let's take a look at the VIX, the relationship of the VIX versus the SPX 500. So as you could see that highlighted this red line here, and this red line on the VIX is a key resistance level at the 32 level mark. So every time it hit this resistance zone, and now it's at 32, the VIX refused to go much higher. All right. So if you look at in the past 2 years or 1.5 years or so, on 15th of June 2020, upon VIX hitting such a relatively high level, the SPX staged a bullish reversal thereafter, followed by 30th of October 2020, a bullish reversal thereafter as well. 29 Jan 2021, a bullish reversal thereafter. Then you have recently this level again on the 3rd of December 2021, a bullish reversal. And most recently, 24th of Jan, a bullish reversal. And right now, it did another retest again, very close to the 32 key resistance level, which was last Friday's low. All right, or last week low, pardon me, last week low. So if you look at last week low, actually went slightly below the prior week low over here, but it starts to show this is what we call it. It starts to actually shape a retreat again from very close to this 32 key resistance level on the VIX. So what we could actually say that the potential bullish reversal that we potentially could see, uh, we can't actually erase off this probability. Yeah, even though the Ukraine-Russia tension is a wild card, but market has really comes to a point that there's a bit of relatively fearfulness on the high side, where we could actually easily kickstart a potential bullish reversal if the situation in Ukraine and Russia starts to turn slightly positive. Why do I say slightly positive? Is because of the relatively high fearful factor in the market. So any little positive news, just a little positive news, could actually kickstart this potential medium-term bullish reversal. We call it a sequence on the SPX 500. Okay, so now very quickly now let's go to the technical chart of the SPX 500. So what we share with you all is why we are still holding on to key support levels where I could not validate any down move beyond this key support level is let's take a look at the weekly chart. So our weekly chart, right, will form the basis for our quarterly outlook, which is Q1 outlook, which I share with you in my Q1 2022 global markets outlooks. Also can be found on my Twitter handle as well on the video of it, which I shared in during in January before the Chinese New Year. So what we could see over here is this is the key support level 4240. So as long as 4240 holds, that means there's no weekly close below this level. We could still see a view of a final push up or final melt up. We call it a potential melt up, a melt up or a rally of hope and irrationality to take us to the risk level of 4990, maximum 5170 slash 54 figure level before there's a risk of this A wave, a big A wave in terms of elliott wave and factor analysis actually take shape. That means we're starting to see that, hey, the 13-year bull market cycle is more or less ended. That's in place since March 2000 or 2009 after the great financial crisis low. All right, so this is the what we call expected potential view that we have in a longer term picture. Okay, all right. So now, given on the shorter term technical view over here is, like I said earlier on, 4240 is my long-term support level that I define on the weekly chart to maintain this minor, maintain this last push up or last melt up scenario. So at most, right, I could actually say that, hey, there will be a downside down to 4240 on the intraday basis. But on the weekly basis, I cannot validate anything further than 4240 because this level has not been broken to the downside. That means there's no weekly close below 4240. All right. So let's go to the daily chart. Okay. So on the daily chart over here, what we could see is it starts to form what I call a candle at the moment. So this was last week candle. So last week candle starts to get smaller compared to the prior week long candle. And right now, currently this is live. So intraday right now is trying to actually surpass the opening price of the last Friday's candle. Okay, so one of the reason why is it positive right now is that is some positive breakthrough between the Russia and Ukraine tension, which I also tweeted on my social media handle upon about what's the situation right now on the live basis because I do keep a close watch of the market happenings. So anything that I found is market moving, I will actually immediately tweet out on my Twitter handle so as for my followers to actually have a instantaneous update of what's going on in the market. So okay, quick recap again. Why it's actually push up over here is because there's actually a talk between Biden and U.S. President Biden and Russia President Putin will actually take place very soon. And this talk is being brokered by France President Macron, which actually met Putin yesterday to actually speak to him about the situation on Ukraine. So market participant now has started to seems to say that there could be a potential negotiation that we call horse trading taking place that may allow Putin to actually tone down his hawkish rhetoric towards Ukraine and even for Biden to actually tone down on his reiteration that keeps saying that in the last 2 or 3 days. So one of the reasons I want to highlight here is why the market actually turned so jittery is because US has a stance and US keeps saying that Russia is about to invade Ukraine within the coming days, and they say that they have very strong intelligence information That's the only headline. But what's intelligent information? Nothing is being leaked out at this moment in time. But that could actually cause a negative feedback loop in the market. All right. So things have started to turn slightly positive after the we call it the French President Macron actually brokered this talk between Putin and Biden. So what's interesting over here is that the positive turn actually happened very closely to the 4250 key long-term pivotal support level. All right. So, and if we to this is the daily chart. So what you could see is that the next key level from a medium term. Okay, so I'm saying that medium term perspective over here is called multi-week. So the next key level on the multi-week on the SPX will be 4590. So definitely, we got to see a breakthrough above 4590 before we talk about a possibility to retest the current all-time high area, which is January this year, and further beyond that. Okay, until this level breakthrough, we will start to see about a bit of what I call wishy-washy price action. But as long as this 4240 cannot break on the downside, I can't validate a further down move below 4240. All right. So this is kind of the very precise and what you call it precise and we call it precise. What are the words? Precise and standardized technical analysis that I use to practice in my 10 over years of career. All right, that I will share with you all. Okay, so now on the 4 hour chart, if you look at the 4 hour chart, this is where we try to zoom down on the lower time frame to look at interesting technical configuration to see whether the short term momentum, as in because the momentum we start to see is on the downside since later part of last week, has it started to dissipate. If it start to dissipate, it actually further strengthen that long-term pivotal support that we defined earlier, much earlier at the start of this year, which is at 4240. So what we could see over here, right, in terms of chart pattern right now, since the high of 11th of February, all the way down to last Friday's low, it starts to involve in the what I call impending bullish descending wedge configuration, which is positive. So to summarize what is a bullish descending wedge. So a bullish descending wedge, if you look at the situation over here, is that the gradient of the lower low is less steep than the gradient of the lower high. So what it means that since the gradient is less steep on the lower low, it, it implies that downside momentum on the short term has starts to dissipate or abate. And it could actually be further reinforced by this momentum indicator, which is the 4 hour RSI. Okay, so a 4 RSI also a gauge of momentum, and you're able to see if momentum is getting overstretched either on the upside or downside. If momentum is getting a bit extreme, it will hit the oversold level, so there's a potential of a bounce. And the next key step is once it hit the oversold region, which is did on last Friday, the low that is being formed over here, does it compare to the low that was formed previously at the oversold level? You realize that there is a big difference, all right, in terms of the direction. This is lower low, but this low here is higher low at the oversold region. So what it means that it actually kind of reinforce the slowdown in downside momentum as explained by the price behavior that's being formed within this bullish descending wedge, which I highlighted earlier on, I shared earlier on, and reinforcement by the momentum indicator, which is bullish divergence. So all in all, right, what it could mean over here is that hey, there could be a potential we call it a bullish reversal that is coming into play, at least in the short term, all right, for the SPX 500 and right above the 4240 key long-term pivotal support level. So, but however, I need to have given that the situation in Ukraine, Russia is rather fluid right now, I would need to add a upside trigger level, which is at the upper boundary of this descending wedge configuration, which is at 4450. So we need to have a clear break above 4450, which is also the former swing low area of 4th of Feb, in order for us to take us in first step towards 4590. So a breakout above 4590 should see higher towards 4675, which is the former swing low area of or the swing low area of 17th of Jan and 17th of Jan area on 18th of January this year. And also, if you could draw a resistance level, it will be the Fibo retracement of the all-time high of 4th of Jan all the way to the 24th of January low, which is 76.4%. And also, if you do the Fibo extension, taken from the low of Jan, 24th of Jan, to the high of that wave 1, 3rd of Feb high, and to last Friday low, you could start to see close to the one-time extension as well. Okay, so but however, if we start to see a weekly close below 4240, because I need to have a weekly close because that is a long term key support level that I defined on the weekly chart, we could start to see the start of that major corrective down move, major as in multi-month potentially, to actually hit the next support level in first step at 40.35. All right. So now very quickly on the Nasdaq 100. So if you go through the Nasdaq 100 on a weekly basis, so this is the weekly strategy that we have, or the quarterly strategy that we have for this quarter Q1, which I defined earlier at 13,900. So price action on Friday actually tested close to 13,900 again, but refused to have a weekly close below 13,900. So I can't validate that major or the start of that major downtrend, which is the Roman wave A. So we are still now, there's a possibility to actually shape this final melt up move, which is a rally of hope and irrationality to potentially take us to the risk level at 17,590 slash 18,150 before that we call it that major corrective down move take a shape to actually damage or potentially damage the 13-year uptrend, a 13-year long-term circular uptrend that is in place so far since March 2009 low. All right, so until 13,900 breaks, because it hasn't broken to the downside yet, there's still a possibility of a last move up, and this recovery is a recovery of hope in irrationality. So there will be you see a last burst where everybody get disillusioned with the bull market, and eventually it will just die off from there in terms of sentiment. So there is still chance for it to shape this potential last move at as long as 13,900 holds. That means there's no weekly close below this level. So now let's go to the chart itself. So we could see the chart 13,900 was tested, and the key support level, resistance level to watch on a medium term basis is at 15,540, which was previous support level on 2nd of December, 30th of December, and 6th of January this year before it was taken down. All right. Then on a weekly basis, that means on the multi-week basis for this week itself, the strategy is almost the same like the SPX, where you also start to shape this bullish descending wedge configuration. All right, and also right now it's actually also shaping that bullish divergence that is being seen on the 4-hour RSI. So indicate to us that the short-term downside momentum that was seen late last week has started to ease off, where we could start to see a potential bullish reversal. So I also added a upside trigger level on the Nasdaq 100, which is at 14,380, which is the upper boundary of this descending wedge configuration. If you have a clear break above 14,380, then we could start to see it to take us higher towards the previous swing high area at this 15,270, then followed by 15,540. So what's 15,540 was that graphical, former graphical range support, notice the pullback resistance on the daily chart. If you do the Fibo retracement, taking from the all-time high in November last year, all the way to the 24th January low, we could see it close to 61.8%, which is the golden ratio, and we do the Fibo extension, taking from the low of 24th of Jan, project it to the wave 1 high, which is at 2nd of January, and project it to the low so far that we see today. Okay, so it's actually close to one time as well, one time Fibo expansion. Okay, so however, if we start to see a weekly close below 13,900, then we could actually validate a further down move to give an indication that there's a high probability that we will start to see that multi-month major corrective down move sequence to actually hit the next support at 12,970 in the first step. All right, from a multi-week perspective. So now quickly let's go through the Hong Kong 50. So on the Hong Kong 50, I'll share with you again is the key long-term pivotal support is at 23,000. So why 20,000 is key? Definitely, if you could see over here, is that the way the candles that's being tested on the December 19th of December week last week, late December, 28th December last year, pardon me, not last week, and as well as at the start of this year, it started to form this kind of a long-legged candlestick, which is taking on the form of a bullish weekly hammers for 3 consecutive weeks before the price stage a decent rebound. And what we could see over here is that yes, even though last week it staged a pullback, it's still hovering above the 50% marker of the previous up move. That means the previous up move it did a retracement. The retracement over here is still close or above the 50% mark. Okay, It's above the 50% mark over here. So indicate to us, right, there's still a bit of there's still strength on the what we call Hong Kong 50 index after shipping a bounce from this key long-term pivotal support level. And also, this long-term pivotal support is also defined by this ongoing long-term circular trend line, ascending trend line that's taken from the Great Financial Crisis low, October 2008. So now you can see how important this 23,000 level is from a graphical perspective and from a price action perspective that was actually seen when it was tested in the last 3 weeks from December all the way from mid-December all the way up to early Jan. All right, so this is the technical. So as for what I mean that over here is that as long as 23,000 didn't break on the downside, or for Hong Kong, I cannot validate a further down move. So if you're talking about from a weekly basis, yes, we could actually see down move potentially. If I look at the short-term chart, means I got to see the short-term chart. What is the short-term technical configuration, which is the 4-hour chart? What's the possibility of it hitting 23,000 rather than hitting up? Because now it's the middle of nowhere. Okay, so now in order to do that, let's go to the 4-hour chart. Okay, so we could see on the 4-hour chart itself over here is almost not almost things still remains the same because last week we set using 23,380 as my key middle term pivotal support level. So what is this 23,380 it was the swing low of 28th of January. And also if I were to draw a Fibo retracement taking from the low of 20th of December all the way up to the recent swing high of 21st of Jan, okay, is this 76.4% retracement. All right, so we have this Fibo retracement level that is conferencing at 23,380. And last week we actually used this gap here, 24,000 as my intermediate support, which the price level right now is trying to bounce above this level. And the RSI right now is coming close to the oversold region as well, which is also this key corresponding ascending support that I draw, linking from the lows of 29th of November, now acting as a support level, okay, which is at close to 30%. All right. So what we could see over here is as long as 23,380 holds for this week, we are still in favor of a potential bounce, at least in the first step towards 25,250, which was the former swing high area of 21st of Jan before this prior steep minor corrective decline takes shape and also close to the high of 10th of February as well. So we're talking about as long as this 23,380 holds, we could still a chance to actually see a push up to 25,200. So a break above 25,200 should take us up towards the key medium-term resistance zone at 25,860 slash 26,220. What is this level? It's the swing high area of 27 of Jan, 25 of October 2021. And as well as if I draw the Fibo expansion, taking from the low of 20th of December, project it to the high of 21st of Jan, and project down to the 28th of January 2002 low. It goes to one time Fibo expansion level, and also graphically, it's also this we call it major expanding wedge configuration resistance since the high of 18th of Feb 2021. Okay, now acting at resistance at 25,860. So then what we could see over here, if we have a 4-hour close below 23,380, then I could validate a down move to retest that long-term pivotal support at 23,000 slash 22,680, taking into the excess low of 20th of December. All right, then now moving on to the next Asia indices, will be the Hong Kong, the Japan 225 or the Nikkei 225 that we call them. Okay, so let's take a look at the Nikkei 225. So for Nikkei 225, right, what we could see is that since hitting the Feb 2021 high and September 2021, okay, February 2021 high and September 2021 high, which is at 30,716. Okay, so that is so close to about a 13 or 14 year high on the Nikkei 225. Then ever since then, it hit this key resistance level. It can't break much higher and starts to trace out in the fashion of lower highs. You could see by this gray descending line here. So all in all, right now, last few weeks is kind of test the major range support, all right, at 26,880 slash 26,150, which is taking into account the swing low of 27th of January. Apparently, it seems to me that it starts to trace out at impending major double top. All right, but now the last few days price action or last few weeks, it managed to actually bounce off from the neckline support of this impending double top. So definitely with key intermediate resistance at 27,900, then followed by 28,820, which is this descending trendline resistance that kept previous price action from hitting much higher since the high of 14th of September 2021. Okay, so now let's go to the daily or the 4-hour chart to look at the short-term strategy. So momentum wise seems to be a bit stabilizing right now. Price action is attempting to bounce off from the oversold region. So all in all, right, last week we have a key medium pivotal support at 26,150 over here, which is the swing low area of 27th of Jan. This low. So I'll still maintain this level as my key medium term pivotal support level. Also, they're looking for a push up to retest this upside trigger level at 27,900 slash 28,110. Unless we could have a clear breakout above 28,110, then I could validate a further up move towards 28,820, which is the swing high area of 12th of Jan, 7th of Jan, and as well close to this descending trend line that has kept previous rallies since 14th of September 2021 high. And however, if you start to see a breakdown below 26,150, so 26,150, right, is being the key pivotal support over here. So we need to have a weekly close below 26,150 before I could validate a further down move to actually test the next support level at 25,250 slash 25,200 level. Okay, so then now what's next for the German DAX? Okay, so from the German DAX, if you could look at it in the configuration, so it's also very similar to the Nikkei 225, okay, over here. So it could also be implied like a double top, potentially. So so also early part of last start of the year, which is 5th Jan, it also attempt to actually retest and break above the former all-time high at 16,280 or 16,300 if you look at the intraday high, which is 19th of November. So the swing high area will be 16,280, taking into account of the recent high over here on 5th of Jan this year. So what we could see is that but price refused to break its range support level at 14,800, okay, which is the low of 6th of October, and as well as the swing low of 13th of May, or also the 4th of May. So every time the price tests this level, one time, two time, three time, fourth time, fifth time last week, it refused to break down and start to bounce. So definitely this is a key support level that we are watching. Okay, so if this support level breaks, then we could actually validate a further down move towards the next support level at 13,800 slash 13,600. Okay, and the RSI also seems to be is stabilizing, but it's kind of a bounce off from the oversold region, stabilize a bit, but still below the 50% neutrality level, which is the resistance level, and as well as this corresponding descending trend line resistance level as well on the RSI. So with that, unless RSI could shape a breakout above this descending resistance level, then we could start to see more positive momentum coming into this market. So until then, it could be just a big messy sideways movement holding above 14,800 level. Okay, so now on the 4-hour chart, or we could see on the 4-hour chart over here is uh, the key medium-term pivotal support for this week would definitely 14,800, as explained earlier on the daily chart. And right now we start to see the RSI start to hold above this short-term key corresponding support level, okay, which is close to the oversold region. So last week it hit oversold. Uh, on the 14th of February, it hit oversold and attempt to bounce off it before coming back down again on the later part of last week, which is the last Thursday and last Friday. So definitely we have a short-term descending trendline resistance that has been capping previous rebound from going up much higher since the high of 5th of January 2022, and now is actually a resistance level close to 15,460, which is the last swing high area of 16th of Feb 2022. So I'll be using 15,460 as my key upside trigger level for this week. So the German 40 index got to have a clear break above 15,460, a breakout above 15,460, at least a 4-hour close above 15,460 before I could validate a move in first step towards 15,735, which is the 2nd of February swing high area. So, but however, if we start a 4-hour close below 14,800 level, we could take it down much lower towards the next support level at 14,400 slash 14,420. So what's this level? If I were to draw a Fibo expansion, taking into the high of 19th of November, project down to the low of 30th November, then project back up again to the 5th of Jan high, you realize that this is 1.382 Fibo projection. And also, let's take a look at the last swing down from 5th of Jan 2022 high towards 25th of Jan 2022 low, project up to this swing high here, 2nd of Feb to the high, you get a one-time Fibo projection as well at 14,270 or 280. So definitely we will actually look at this zone over here, 14,400 slash 14,270 as my next support zone. If the 4 hour, we call it, if you have a 4 hour breakdown and close below 14,800, then I could validate a further down move towards 14,400 slash 14,270. So until now, we still are in favor, uh, given that the earlier technical configuration I shared, we are in favor of a bounce. But in first step first towards 15,460, a clear break with a 4 hour close above 15,460, then we should see potential for the move up to retest the 2nd of February swing high area of 15,735. So definitely all in all for this week will be very much crucial on the markets. Why? Because it's likely more or less driven by what's the situation in Russia and Ukraine. Okay, but overall, yes, even though the tensions remain relatively high at this time point in time, uh, yes, it may cause a bit of jittery last week on the risk asset, especially on stocks. So, but however, major stock market benchmark indices are still holding on to their respective supports level, like I shared earlier in this video. So hence, I could not validate a further down move at this point in time because they're still holding on to support level. And what's interesting over here is that on the shorter term, momentum indicators of the various indices that I share with you, the technical analysis of the various indices from the SPN to SP for the SP 500 to Nasdaq 100, from Hong Kong 50, German 40 and Nikkei 225. Short-term momentum indicator, the 4-hour RSI has started to show signs of downside momentum has started to ease off, which is a positive scenario as well for it to potentially shape a recovery from here. So with that being said, that we cannot write off a potential medium-term bullish reversal yet at this juncture. And all in all, what we share before we go is that this is my social media account. Okay, so you can actually follow open a Twitter account. It's free. You can follow me at Kelvin SC Wong over here. Just tap at Kelvin SC Wong. Follow me, and you're able to receive daily updates of what's going on in the markets from a daily basis, starting at 9:30. Okay, so I'll just start tweeting around 8 a.m. Singapore time, and from there you're able to get a first snapshot of what are the key news and events for the week, okay, or for the day. Pardon me, for the day. So with that, thank you very much for your time, and I hope to see you again in my next video.